All right. Hello, everyone. Thanks for checking in. Let's go over what the market did today and more importantly, what we think it's going to do tomorrow. Now, if you come to our morning session, which you should, you would know kind of what we're looking for. It's kind of playing out as we thought. And, we're not here to take a victory lap. What we do here at Stock Market Jobbers, we let the market tell us what to do. No, the market's never wrong. We don't have any secret formulas. I can't promise you that I can give you a stock that's going to return, a zillion percent in X years. I don't have a secret model, blah, blah, blah. But if you really want to learn how successful traders think and what they do, I think you should check us out. So, anyway, traders that are successful pay attention, in my opinion, to four things: price levels, momentum, psychology, and trends. All right, so here's the S&P 500. Here's SPY. And kind of another non-day. Let's make this a little easier to read here. Basically, SPY kind of ran into resistance around 455. I mean, there's really not much going on here. This is not the type of market you want if you're a trader because it's just kind of boring, at least the SPY is. But that's okay. A lot of times, the best strategy is to sit on the sidelines. You don't always need to be in the market. And a lot of newer traders or beginners end up losing money because they overtrade. They feel as though they always need to be doing something. And you don't need to overtrade. Whenever I have a standard answer, well, maybe 98% of the time. Maybe there's 2% where I would agree. But someone says to me, like, hey, Mark, I'm in this position. What should I do? My answer is, if you don't know what to do, get out. You can always get back in. If you lose confidence in a position, maybe it's your subconscious telling you something. All right. Anyway, I think we're kind of setting up bearishly here. SPY's been going sideways. The market is really focused on interest rates, as we all know, or as you all know. Interest rates went down again. This is going to be the catalyst, in my opinion, to a tradable rally. So over the next, equities have been kind of boring, but I think we're about to see a move down in equities. And why is that? Well, the market is really paying attention to interest rates. Interest rates have been coming lower. Lower interest rates are good for stocks. Companies can operate at a less of a cost because they can borrow money cheaper. Stocks become more attractive if interest rates are going down. But a lot of times when we get to levels that were previously resistance, they can become support. So this 432 level was resistance, and it might become support. Why is that? How does that happen? Well, there are people who sold back here who experience seller's remorse when the price goes higher. Okay. When it gets back to their level, there's a lot of people that say, you know what, if I could buy my position back, I will, because I can kind of, erase the mistake that I made. So resistance levels can become support because of seller's remorse. There's people who are selling here who are now going to be buying back. And when things get to support, sometimes they rally. That's because support is a large group of buyers, and they start to get nervous someone's going to cut ahead of them. So they start outbidding each other. It's like on Storage Wars, although that show is fixed. But, people outbid each other. If we look at the technology sector, which is the biggest sector in the market, and what's kind of amazing is I went for literally like a decade not paying attention to interest rates. And now it's like all of a sudden interest rates are driving the market. But that's because we haven't had inflation in, years and actually decades. And don't believe this whole myth. Like, I think it's such a disgrace that President Biden goes out there and is like, oh, companies are price gouging. They got to cut their prices now that inflation is down. Inflation is not down. It's still going up. It's just going up at a lower rate. And everyone who has to buy stuff knows that. But anyway, here's our technology sector. This is a really good chart for understanding the dynamics I just talked about. Now remember, this is a sector that's worth trillions and trillions of dollars. And check it out. Resistance becomes support. Seller's remorse. People sold here. They regret selling when the price goes higher. They go to buy back. If there's enough remorseful sellers placing buy orders, resistance becomes support. Resistance becomes support. People sell here. They're like, when it goes higher, they buy it back. Resistance becomes support. When resistance stops becoming support, that's our sign that we're at a market top. So over the next couple days or a week or so, will this sector kind of reverse and test this level? That was important. And if resistance becomes support, that's the setup for the next move higher. But I think that the interest rate thing is more important. And if interest rates rally, which means bonds are going down, but that's going to be your catalyst. So again, we just looked at treasuries and we looked at they're getting close to a level that was resistant. So here's the tech sector. Resistance becomes support. We rally off of support because there are people who want to buy and they know the market's going lower because there's not enough demand or buyers. When the market stops going lower, some of them start to get nervous. It's like, oh, I got to bid a higher price because the sellers are going to go to whoever is willing to pay the highest price. So when we get to support, we tend to rally because buyers are freaked out. We get support at former resistance levels because remorseful sellers are trying to buy their positions back. So those same dynamics play out in pretty much every market in the history of mankind, whether it's, bonds, cryptos, stocks, whatever, commodities. So if we see the same action here, rallying off of support, well, that's going to be negative for stocks. Now, let's just we looked at SPY already. We'll just take a quick look at it again. Kind of just, it's like it may not be going down, but it's stopped going up. And this might sound silly, but it's true. Right? One of the first things something that's going up needs to do before it starts going down is to stop going up. So it stopped going up. Really important too here to watch is the financial sector. The same kind of a thing. Got to resistance. There's only a couple pennies here. So market is hitting resistance. I think there's a chance that interest rates are about to move higher. I think the action in Nvidia was really interesting last week because it pointed these, or it, had these blowout numbers and earnings, and the stock didn't go higher. It actually has gone in reverse. This is what we call action. Traders call price action. You can't quantify it, but just think about it. If a company reports blowout earnings and the stock doesn't move higher or goes down, something is wrong. Well, it's not that something is wrong, but it displays a market principle. The market runs out of buyers. Everyone and Aunt Mary was positive on NVIDIA. That's all we heard about NVIDIA this, NVIDIA that. So guess what? People went out and bought it. The earnings come out. Everyone who wants NVIDIA in their portfolio already has it. So there's no one left to buy it anymore. Market runs out of buyers. The only place it can go is lower. All right, everyone. Let's just take a quick look through here. Some other things that are going on. Industrial sector, I think, is pretty interesting. Here's a sector that is overbought, which means it's trading above what would be its normal or historical trading range. There's a term called average, which you may have heard before. It's the average. Things tend to go back to their average, whether it's stocks or anything else in life. So when we get way away from this average on the upside or the downside, we call this overbought or oversold. If we're on the upside, we call this overbought, like we are here. And a lot of trading systems and models and strategies on Wall Street are based on this concept of reversion to the mean. So the fact that we're overbought means there's going to be a lot of traders who are anticipating a reversal here in the industrial sector. All right. So we're at resistance. We rallied. What is resistance? Resistance is a large group of traders or investors who want to sell around the at or close to the same level. See, it was support. People bought back here, started to sell here. All price levels are not equal when it comes to markets. Some price levels are more important than others. I mean, look at this 97 level for the industrial sector. This thing is like sector's worth like trillions of dollars, and yet somehow finds this perfect support around 97, and it rallies because of anxious buyers outbidding each other. It finds this like perfect support, resistance around 103.50, and it sells off because of anxious sellers undercutting each other. Anyway, we're overbought, drawing sellers into the market. We're at a resistance level. It looks like this is reversed. There's probably going to be some trade ideas in the short side in the industrial sector. Actually, I don't even think probably. I think there will definitely be some trading ideas on the short side in the industrial sector. And I tell my students, don't short stocks. Short is just a term. Short means you think, all right, it's going to go down. So you're much better off buying a put, because if you're wrong, the most money you can lose is what you spend on your put. If you short a stock and you're wrong and the stock goes a lot higher, you could end up having to owe your brokerage firm a lot of money. Anyway, everybody, thank you so much. Please tune in tomorrow morning at 8 o'clock Eastern time, and we'll follow up on this idea, and we'll talk soon. I will see you then.